Hi everybody, this is Joel Wood, your lobbyist here at the Council. Hope you all had a great Thanksgiving. Quick special edition of Uncommon-tary based on a bunch of things that have been happening in the last week. First news item on Monday, Representative Barney Frank announced his intention to retire after many years in the Congress. This was surprising, though not completely shocking. We had Congressman Frank in our offices just week before last, and he expressed more than his usual level of exasperation at how the political processes had deteriorated in Washington. He, for all of his activist, liberal outspokenness nationally, he was very, very reasonable on insurance issues. We work well with him and his staff. He had addressed members of our association and our legislative conference, and we were pleased with the help that he gave us during the Dodd-Frank regulatory overhaul on insurance-specific matters. He, interestingly, was the one who had a great quote after the Republicans seized control of the House of Representatives, saying, asked how he would feel about no longer being the chairman, but rather being the ranking member of the House Financial Services Committees. He said, "Look, I'm a left-handed gauge U. I don't naturally feel to be a member of any majority." I do think, though, that he found being on the minority side more than a little frustrating. The intrigue is now going to come over what does the Democratic caucus do. The next person in line, by virtue of seniority, is Representative Maxine Waters. Very, very liberal firebrand from Southern California, makes Barney Frank look very, very moderate in comparison. Whether or not the caucus is going to be willing to elevate her, whether or not she's able to get through her ethics committee investigation over the next year, this is going to be very, very interesting indeed. Next item. Last week we got guidance from the New York Insurance Department on commercial lines deregulation, which has been greatly broadened there, and we welcome this news, especially grateful to Rob Easton, who formerly was the general counsel, worked at Integro, and has now come back and is running many of the insurance functions of the department. We think this is a good move forward. It's my buddy Chris Randall from National Specialty Underwriters in Bellevue, Washington, sent me this note this morning. Said, when you step back and look at who needs to be regulated, and more importantly, who does not, this seems to be a very reasonable approach. You cannot imagine the time and money that gets wasted at insurance companies making rate and form filings for the commercial marketplace with, in my opinion, very, very little benefit to consumers. So the thing we have to note is that this guidance is only, in this new law, is only for a 2-year period of time. And so if the marketplace hardens, who knows where we're going to be, but we're hoping that this will serve as a model for many other jurisdictions. Next item. National Association of Insurance Commissioners last week finally passed on a narrow vote its resolution sponsored by Kevin McCarty, the Florida Insurance Commissioner, to exclude agent broker compensation from the minimum medical loss ratio formula, at least in the recommendations that the NAIC has now made to HHS. Really hard to say how much, if any, practical impact this is going to have on the way that HHS views the world. Also, Senator Jay Rockefeller, the spiritual guru of the minimum medical loss formula, sent a very, very strong letter to the NAIC opposing this effort. Very much disdainful, I believe, of the role of agents and brokers in providing value to clients. And so I don't know how much practical effect this is going to have, but it sure is one of those wonderful occasions where we have members of a significant body, the NAIC, going on record as to who supported the interests of agents and brokers and who did not. Attached to this email, we've got that list of how they voted. It's worth taking a look to see how your individual commissioner had voted on that. Item. Last week, the Starr International, Hank Greenberg, on behalf of Starr and other AIG investors, filed a lawsuit against the New York Fed and the Treasury Department, claiming that the 2008 government takeover, the 80% takeover of AIG, was unconstitutional based on the taking of private property without any just compensation. I'm no constitutional scholar, and I know this is controversial, but it sure is a reminder as well of how interesting things can be in an otherwise mundane commercial insurance marketplace, and I sure as hell wouldn't count Hank Greenberg out on anything that he decides to pursue on a legal basis. And my final comment, I'm sad to report my colleague Nicole Allen, this is her last week at the council. She quit us before, maybe we can get her back again. She's going to be going over to a new wonderful regulatory affairs job at Swiss Re. I know that I speak on behalf of Ken Carrar and the others on our staff in saying that she will be greatly missed, and I hope you'll have an opportunity to convey that to Nicole as well. Again, have a great holiday season. Look forward to keeping you up to date on these and many other issues. Thanks.